Now, as I was saying in the last video that I was going to show more about the model which I was talking about in the last video. Here it is. Okay. Please just watch the market from this fix. Okay. The market created, market swept this high. Okay. And using a Fibonacci tool. Okay. I could easily find myself a shorting position at 50% rejection. Okay. Now, the markets were taking support at this point, and that was a easy way to tell that I should probably get out of here. Okay, even though there was a lot of untapped FPGs below, but when looked closely, the market did take out the last lows. Yeah, the market did take out liquidity below the last lows, and so it, it turned absolutely volatile and filled out a high confluence, high time frame OB, and then rushed down. Now, this is exactly what I was talking about. This is the first, this is a second short leg, and this is the third leg, which is the highest or the lowest in bearish case scenario. This is like the highest. Now, in this case, I could have just either had my shorting idea just below here, okay, and my since I had this OB in here, so I could have just had my stop losses just below this OB and could have had my take profits below these lows, okay, the internal sites of liquidity. But there are some imbalances over here as well, and there's an OB in here. So let's just drag it down to the OB. So this can become my first take profit, and this can become my second and my last take profit. This could have been one of the entry models, or I could have had used my uh, Fibonacci retracements tool and would have just got another entry. But just note when the market does sweeps out a high time frame or a low time frame, but it just sweeps out liquidity. It doesn't matter which time frame. The market is quite volatile at that moment. You may not find retracements over there. For you to catch a market sweep entry, you have to either place limits or that you have to always, always be active on the market, and that's not possible. So this was all about my two-step and my three-step trading models. And if inverted, this is how it looks in the bullish. It takes out the last low. It forms the first A block. Okay, it takes out the last low and shows bullish sign and momentum. Closes the closes above or just sweeps the liquidity and gushes down. Now, this gush down can also be due to a wide range of reasons. The market could have just swept a golden zone. Okay, so you have to always make these Fibonacci retracement tools throughout your trade, and always look out that if the market is going to a high liquidity zone according to the Fibonacci or not. Now, in this case, it did, okay, and it rejected in a bullish case scenario. Okay, it rejected the golden area and it just slipped through, taking in the side cell internal liquidity along with the OB and went up. And it's that easy. And as I promised, this is how it looks like in a bullish case scenario. And that's it. This is all about my model. And there's another two models which I use or look out for. Uh, One is market maker models, okay, also known as MM models. It can be the buy model, okay, or it can be the sell models. You'll find modules about these all over the internet, okay, and you may even find how these goes. Like I'll just show you in a quick way. This is original consolidation which happens. The market breaks above in a in a sell model. Market breaks above. It consolidates again. It goes up. Uh-huh. It goes up, consolidates, goes up, consolidates, goes up, consolidates. This happens four times, three to five times. Okay, mostly four times, and then it goes down. Okay, now when it goes down, taking all these stops below. Then it goes up again and takes out these OBs. Okay, consolidates a little, then goes down, takes out all these stops. Okay, goes up, takes out these OBs, is short again in this consolidation, then it goes down, taking out all these stops, consolidates, and either moves up or continues to move down. In 90% of the time, it does moves in reverse. This is sell model. The opposite is exactly buy model. I'll just invert the screen for better understanding. Now, the third model which I use is known as a turtle soup model. Now, please note about sessions before I even start talking about turtle soup. A turtle soup is formed at 2:30, okay, 6:20 to 7, more like 8:10 in the evening. This is, please note, these are all evening timings. And this happens not a quite number of times, but 10:20 to 10:50. These are all IST PM timings. Okay. And it only occurs once in the AM timing, and that is at 11:15, more like 11:20 to 11:40 AM IST. These are all Indian timings, and these are the best timings to trade turtle soup. Now, what are the other best timings to trade in Forex? These are 1:30. Please note again that these are all Indian timings. 1:30. Then there is 4:30, and this is the time which I like to trade personally because my model is mostly made in this exact timing, and I really believe that even the most dumbest of traders can actually trade at the price action formed at the market structure formed till 4:30 p.m. in Euro USD. And yeah, last thing I would want you all to note in all of this is that these are all IST timings, and all of these only and only applies to Euro USD and sometimes gold. Now let's delve into what is exactly turtle soup. Now, a turtle soup is generally formed in these timings. Now, please note that there's three legs, more like four or five sometimes made, or sometimes just even two. Okay, and it just depends. You just have to identify them, and I'll surely give out examples at the end after I'm done explaining what turtle soup is exactly. Now, I'll be teaching about bullish turtle soup in here. Now, let's say there's this market which is falling, okay, and suddenly, out of just nowhere, there's no liquidity sweep or there's no support. The market is just air in air, takes support and just goes up, okay, and it makes a high, right? It makes a high, it breaks the high, okay, and it takes out liquidity in here from here. It just goes down and it takes out the liquidity below this. Now, what is this called? This is essentially called a short, right? But but to make a turtle soup happen, there should at least 60 to 70% of the time need to be a fake church. Now, if a fake church is there present and there's the market in these tradable timings, you are blessed. Okay, just remember you are blessed. Now, what's gonna happen is the market's gonna take out these lows, and people are gonna jump into thinking, mostly retailers are gonna jump into thinking that the market again need a short, and they're gonna indulge into shorting. Now, where are they gonna indulge into shorting? It can either be at the golden zone, right? It can be at 50%. It can be anywhere, right? Exactly. So I'll tell you what do you do exactly. Because the market is has took out this liquidity as well. And the market is going to rise. Okay. The market will continue to rise and will at least take out these last highs before moving further downwards or upwards, but it's gonna take out these highs. Now, where do you get into the trade to get this the highest momentum or fall and not get your stop losses hit in here or in here or in here? Exactly. Now, after fake charge has happened, you need to wait for the market to take its uh, last low, okay, and the candle should close below the last low's wick. It should close, even if it's like a minute percentage, at least for the 80% of the time, the market should close below in here, okay, and it's gonna form a wick, even if it's the smallest of it. It's gonna form a wick, and this will the fractal will show that this is an absolute low. After this low, this is the absolute low. So what you're gonna do is you're gonna mark this church as and name it as TS for turtle soup. This is also known as point A, point A. Okay, and this is known as point B. Okay, and the market not always will move just exactly like this. Okay, it will not. 90% of the times it will not. What's gonna happen at least 80% of the time is that the market is gonna go up, but it will go down and it will touch either this wick or the body. But I believe taking the body as your entry to the long is the best option. Okay, it is certainly the best of the options. Okay, you take that, you place your stop losses below the last low and include the spread of the broker of the commodity as well, and given to give your TP as the last high which is made. Now this is a bullish scenario, and the exact opposite happens in a bearish scenario. And this exact area, this wick, we mark it as CISD. CISD. Okay. The market will always tap into CISD or to the wick which beat the lowest of lows. Okay. That candle's body or that candle's wick. And then it's gonna move up. And this is exactly what we call as turtle soup. I'll get into showing examples to you about this turtle soup. But please note that this can also be called as accumulation, manipulation, and distribution. Okay, a turtle soup can also be, in most of the times, be just a PO3 or an AMD. Now, see, look at that example which I'm showing on Euro USD. Uh, this is an example of turtle soup. Uh, See how the market make a bearish turtle soup exactly around 6:15, 6:25, yeah, around 6:30, and I gave you all the timing of 6:20 to 8:40. So the market made this high, okay, at New York session kill zone open, okay, and London session closing kill zone. It made this high, okay. It took out these stops, and there were continuously wicks which were closing upwards the last high. So it was a CISD formed when the market pushed below, okay, and we'll go to lower time frame in here. The market did push below, okay, and this was the high. This was the high. It pushed below and it closed. It pushed below and then it went up to close this wick, and this was exactly the CISD. This was the CISD. But see, the market prefers going to the body than the wick. Okay, the market always prefers going to the body than the wick. So I'll always say that the body closing is of a bigger confidence than the wick. So please have your entries more on bodies than the wicks, uh, and your stop losses above the high plus the pip of the spread pips. And my take profits was not in here. It was at this level, this FVG fell, and I did take my profits. Now, by the way, I opened